And what would happen is you'd end up paying off your mortgage 3.5 years earlier and save £16,910 in interest alone. So last year I talked about how much money I'd saved by starting out using cashback. So I'm a fairly lazy person when it comes to cashback. I don't like going out of my way to achieve deals and cashback. I'm the lazy person who just likes to live their life as they do, but would like to achieve some form of cashback or discount on that. And last year I talked about how I achieved about £1,100 in savings by the end of that particular year. And I did that by using a combination of cashback credit card. I had an Amex card with a nice offer on there that gave me up to 1.25% cashback on anything I spent over a certain amount in that year. And I combined that with using JamDoughnut. Now, we talked about JamDoughnut on the podcast before, but how it works is that instead of buying something, whether it's online or in a shop, directly, you can instead use the JamDoughnut app to purchase the exact amount of gift cards through the app, but you get a cashback reward immediately via the app when you buy the voucher, and then you use that voucher straight away to purchase your item. And the cashback levels are very generous. I worked out what my average cashback I achieved from using the JamDoughnut app across a whole range of retailers, so from things like Argos to restaurants like Nando's and supermarkets including the likes of Sainsbury's and Tesco. My average over the whole year was 3.1% cashback. Now sometimes you can get cashback as much as 7 or 8%, which was the highest I got in this last year. Of course, you have to point out some of the drawbacks, because if you are buying with vouchers, then technically you have a voucher, so you've lost your consumer protection if you were to buy something instead via a credit card. So you have to point that out. And ultimately, if something went wrong and the retailer went bust, then you will be left obviously with a voucher that you won't be able to spend. But the likelihood of you buying a voucher that you immediately use and the person going bust in that few seconds is of course unlikely.
And just to say, Damon, on that, a scenario that I found that kind of I got a little bit unstuck with was I bought a washing machine from an online retailer and I paid extra for the delivery and fitting and taking away all the old stuff from the washing machine. And ultimately, the people who arrived couldn't fit my washing machine for various technical reasons. And so they needed to refund me that money. It was about £50. Now, of course, they couldn't do that by cash because I paid by voucher. So then I ended up with a £50 voucher that I didn't really need. I would have preferred, in that scenario, cash back into my bank account. So there's various reasons why sometimes vouchers aren't the best and you just need to be aware of.
But there is a way around that, of course, that if there is a large item that is priced over £100 and less than £30,000, you could pay for some of the item using a credit card to get that Section 75 protection on the full amount, even if the balance of what you pay is by using JamDoughnut and the vouchers you purchase through it. So that is something to bear in mind. So that was one way that I again managed to get quite a bit of cash back. I was still using the American Express card, and I then also added another cashback credit card during the year, which I could use when I was on holiday without any overseas transaction fees, but could also get cash back. Now, I couldn't do that with the American Express card because there would be the overseas transaction fees I didn't want to pay. So I added something else to my cashback armory. Again, as I said, I'm a lazy person when it comes to cashback. I was just doing the things I would normally do in terms of spending in the UK and abroad and in certain retailers and restaurants, but just using these few apps, I was able to accrue £385 cash back in a year. So that's a pretty decent amount by just living my life and using these various apps. Then on top of that, I carried on using roundups. Now, I use Moneybox for my particular roundups. There's lots of other ways you can use cash roundup. So that is where you go and buy something in the shop, and it could be you use Starling or Monzo or other banks that now allow roundups, where they will round up the amount you spend. So let's say you spent £1.60 in a shop, it would round that up to £2. So it would take that 40p and move that into a savings account. Now, how they all do it differs. Some will take the money directly from the current account that you've used. Something like Moneybox works slightly differently because it works across any account that you use. So because you are tying in your credit cards, for example, or current accounts, you can do multiple of those with Moneybox. It's not just using one account. If you do it with your bank, if they offer such a service, they will only round up the money you spend from your bank account. But by using Moneybox, which I use, it technically has read-only access to a range of credit cards that I have and current accounts that I use, and then it calculates the roundups, the notional amount, and then it deducts that amount from my main current account and moves it across into a savings account with Moneybox. So you have to have the money in that current account for it to move it across. It's not taking it off of the individual credit cards or the other bank accounts. So you have to be used to the way that it works. But if you're like me, where you spend on your credit card each month, but then you leave the money that you get from your wages in your current account, and then you pay off your credit card with the money from your current account at the end of the month, then it works perfectly fine. By doing that and using the double roll up that you can do with Moneybox, you can do it with a few others as well, like Monzo, for example, whereby rather than in my example just using 40p that it was using as the roundup, it would double that to 80p. By doing that, over the course of the year, I was able to accrue a further £645 into my savings pot from all of those roundups. And then if you added all the interest that I earned over the year, which was roughly about £15, it meant that my grand total for last year from cashback and interest on that cashback and roundups was £1,030. That's marginally less than I made the year before, but that's still pretty good for somebody that is lazy when it comes to trying to achieve cashback, etc. I was just living my life and managed to achieve that. Now, I did mention that there's a slight twist on this year. Now, in the past, I put that towards Christmas to buy presents, etc. And so it meant that I didn't have to worry about Christmas at the end of the year. Now, an alternative that I'm considering for this year is using that money to overpay on my mortgage. Now, if you were to make about £1,200 a year, I'm just doing that to keep the numbers simple. So I was just over £1,000. Let's say I managed to roughly make £100 a month on cashback and roundups. If I was to have a mortgage of £200,000, a repayment mortgage over 25 years with a rate of about 3.8%, that's just an example that I'm giving you, but fairly typical of someone in the UK. If I took that £100 a month that I'd earned via cashback and roundups and put that against my mortgage, so I overpaid my mortgage throughout the year, but I did that every year for the 25-year term of my mortgage, then what would happen is you'd end up paying off your mortgage 3.5 years earlier and save £16,910 in interest alone. So the point is, it is possible to overpay your mortgage by doing absolutely nothing. If you just take the simple steps that I've done, and I've proved that I've been able to do this over 2 years, so consistently I'm earning somewhere between £80 and £100 a month in terms of cashback, and then roundups are added to that. This is a habit. So this goes back to the first piece in the podcast. I've formulated a habit that every time I purchase something or I'm using my card, I'm building up money, I'm starting to look for discounts and cashback, and I've built something that's automatic, so it makes it easy. Again, that's all part of formulating a habit and changing behavior. I could then use that now to make a massive change in the future if I wanted to by overpaying my mortgage. So it's an idea I'm throwing out there of how you could, by using a New Year's resolution, a new habit, be able to clear your mortgage years earlier, save interest without earning any more money or being any worse off each month.